to Daily Bread with Tom Hartman. I'm your host, Tom Hartman, and today let's look at the October 21st, 2025 news for what moved retail markets. So the first story for today comes from for the Fed. This is from Denise Porter on X, who recounts that Bitcoin shot up immediately after a Federal Reserve governor indicated he is pushing for a skinny master account program. This announcement is huge for integrating Bitcoin into the traditional finance system. This is interesting because it's not just Bitcoin they want to integrate in. It's the idea of stable coins, the idea of different financial institutions. And the notion here is that a master account is an account that financial entities can have at the Fed that allows them to lend, borrow, and do all kinds of different financial operations that are above my pay grade. But they want to have a skinny master account, which is master account light. It's the entry-level tier that will allow, in a sense, lesser commercial entities or financial entities to have an account at the Fed, and gives them a certain status, gives them a certain regulatory clout. They're part of the system, and so it lends them legitimacy. And so you saw Bitcoin rise something like, what was that today? That was a huge spike that happened at at noon Eastern Standard Time, and it rose something like 5% in a straight line. Now, it sold off afterwards. It gave up back all its gains. But the idea here is that it's continuing the sort of story that we've been seeing over the last couple of weeks, and it's been ramping up. This idea that the Trump administration of the United States is really trying to make it clear, from J.D. Vance to the SEC chairman all the way down, that crypto is here to stay. And why are they saying that? Is because they want crypto to go up and to the right? They're not there for it to go sideways or down. They want to go up and to the right. And the Russians were talking a few weeks back that the whole reason for this is that it's a plan or a potential avenue to jubilee the debt from the United States and give it another runway, another source of dollars, of currency. So I think it's interesting that the Fed is talking about it. They did float the idea of the CBDC a little while ago. That got a lot of pushback from the crypto community, and so they're coming at it from a different route. I think the idea of adopting stable coins is a nice little, I don't know if it qualifies for a Trojan horse, but it is the system trying to save itself by co-opting what used to be a rubble band and making them part of the council. Next up, this I don't know that I've ever seen before. This is a story of de-dollarization. This is the ECB chairman, so the ECB, the European Union's equivalent of Jerome Powell, high priestess of finance in Europe, Christine Lagarde, who's here on Face the Nation, a U.S. show, talking about the state of the U.S. dollar. And it's not favorable. I don't think I've ever seen this before. So let's take a quick look.
You have also said recently that you think investors have begun to question whether the dollar would still warrant its status as the ultimate safe haven currency. I mean, the American dollar is one of the strongest weapons, frankly, that the administration has to use. Do you think that it is the rise of cryptocurrency that is most threatening to that, or why are you worried?
I see signs that the attraction of the dollar is slightly eroded. And future will tell whether there is more erosion of that. But when you look at the rise of cryptos, number one, when you look at the price of gold, gold is typically, in any situation, the ultimate destination for safe haven. Price of gold has increased by more than 50% since the beginning of the year. That's a clear sign that the trust in the reserve currency that the dollar has been, is, and will continue to be, is eroding a bit. In addition to that, we've seen capital flows outside of the US towards other destinations, including Europe. So, you know, for a currency to be really trusted, you need a few things. You need geopolitical credibility. You need the rule of law and strong institutions. And you need, I would call it, a military force that is strong enough. I think on at least one and possibly two accounts. The US is still in a very dominant position, but it needs to be very careful because those positions erode over the course of time. We've seen it with the sterling pound, you know, way back after the war, but it happens gently, you don't notice it, and then it happens suddenly. And we are seeing intriguing signs of it, which is why I think that having a strong institution with the Fed, for instance, is important. Having a credible environment within which to trade is important. So volatility, uncertainty, to the extent it is fueled by the administration, is not helpful to the dollar.
So can you imagine if Jerome Powell went on the BBC to talk about how trust in the euro was falling? Like, can you imagine that actually happening? And this is what's happening here. I find this to be absolutely amazing, and it makes my mind just rack trying to figure out why they're doing this. All right, so obviously there's no way she's on the show without it being sanctioned by the Federal Reserve. Like, that's not going to happen. Jerome Powell's not sitting at home going, "I can't believe this is happening." So she says, what are the 3 points she brought up? That in order for the world reserve currency, for there to be stability with that currency, there needs to be trust, geopolitical trust. There needs to be rule of law locally. So they want low volatility as far as enforcing contract laws and agreements. They want the world to want that country, to at least respect them and be like, okay, let's listen to what they have to say. And third, a strong military. Why do you need the military? Because you need to be able to enforce your rules, enforce the regulations, and to at the limit, if people don't want to, if a country does not want to adopt that currency, does not want to use that currency, you want to be able to force them. And she very cleverly said there, the United States is good with one, maybe two of these. And she didn't specify what those two were. Leave them up to your own imagination. This is crazy. This is like if JD Vance was going on TV saying negative things about Trump. This is I don't know what to make of it. I got to look back in the records and see if there's other situations where other chairmen of the ECB ever came and said anything like that in the United States. It makes me think that what they want is to cause people to sell the dollar. That because this wouldn't necessarily make the dollar go up. This would make the dollar go down. And there has been this issue of the dollar not going down. It fell down to this 100 to 96 dollar range, and it's not on the DXY, and it's not leaving there. And so if it's basing and it's going to rise up, the next shock up could see the DXY at 129 the next cycle, and that could be pretty devastating for the rest of the world. Certainly for Europe, it'll be an inflationary. Inflation will be exported to Europe, and that would be pretty brutal. So if she's here doing this, one, it means that it's dire. Two, that it's sanctioned by the powers that be. And three, don't listen to what she's saying. They want something else to occur. And quickly. Gold up 50% in the last year. That's central bank behavior right there. Now we know it's China who's buying it, but they're using that as a saying that it's a safe haven asset when really it's China through gold warrants that is driving the price up. So it's very suspicious. I'm going to see more of what's going on here, and I thought it was pretty fascinating. All right, second to last here is the gold rotation from gold to Bitcoin. So as can be expected with the big jump in Bitcoin that we saw today, even though it was reversed afterwards, all these blog posts, all these tweets, all this information was coming out saying, hey, gold pulled back from its massive rally. I think it fell something like, let's call it 6%, 8%, something like that on the day. Actually, let me just double check. So gold fell something around, 8% from the high. And then also silver also fell as well, had a pullback, and then Bitcoin jumped up on the news of that we talked about, of the Fed accepting skinny master accounts potentially. And so people have been waiting for this rotation trade. People have been attributing the low performance of Bitcoin recently, especially as we had stock markets at all-time highs or near all-time highs, with the idea that gold is what's eating Bitcoin's lunch. In the same way that previously when Bitcoin was up and gold wasn't moving so much, people were saying that people are inside of the Bitcoin trade, not in the gold trade. So if that rotation is happening right now, it's hard to say what that means, but if that is a trend that continues, it could be pretty interesting to see just gold fall down to $3,000 and Bitcoin rise up to new all-time highs. We'll see. But with the run that we had up in gold and in silver, it makes sense that we would have a pullback. As Christine Lagarde just said, 50% up in gold within a year. This is not a normal occurrence. So you can imagine there's going to be some profit taken at some point. Finally, this I just thought it was an interesting point out by Luke Groman, who is talking about this. So in the book, The Mandibles, there was a part where the academic economist who insists everything is fine despite a challenging economy wonders how his college-age daughter is suddenly making so much money, and his street-smart 14-year-old nephew deduces she is selling herself. So this is a story from forgive me one second here. One moment. All right. All right, so this is from Bloomberg TV. So OnlyFans chief executive officer Kylie Blair said that the company has paid out $25 billion to creators since it was founded in 2016. So just have a listen to what's being said here.
And we've got some great data that's sort of going to be shown throughout about the rapid rise that we're seeing in terms of how profitable, because ultimately a lot of people, I think, don't always realize that OnlyFans is British in terms of the way it was founded by a family in Essex. I think it was back in, 2016. Then it has a Ukrainian-American billionaire who's UK-based who now owns it, Keely. But I think all the press coverage I've seen of late, not just about certain of the content creators, but it was also about how profitable each and every one of the people that works for you more. You are more successful in that way than any other big tech company, NVIDIA, for example.
Yes, thank you. I mean, it's nice to get recognised for that, I think, for the business and for our employees. We operate on the basis of a very lean business model, and we do it deliberately. Every hire is very important and very carefully considered. But the thing that I'm probably most proud of out of those figures, actually, it's great that the company does well, but what's more important for us is actually that we've paid out $25 billion to creators since 2016. So there's not very many tech companies that can talk about creating wealth for others, rather than just profiteering, essentially. And so for us as a company, that makes us very proud when we talk to our content creators and we understand the difference that it's made to their lives, the way that they can continue to challenge themselves or build their fan base or try something new, be a bit disruptive, be a bit, reinvent themselves in some way. And so for us as a business, providing a platform and enabling creators to have the tools to do that and to connect with their global fan base is really the thing that makes us very proud. And you're right, I always joke we're a British company with a very American personality. So everyone kind of assumes that we're American.
And are most of your users American?
The majority of our revenue comes from America. That's our single biggest user base. But there's a healthy number of British people who didn't put up their hand in the room today, who are, yes, exactly, who are subscribers or content creators on OnlyFans as well.
All right, so when I see something like that, this is, it's prostitution that's being promoted there, and then that's the business that they're in. And if you watch that video, I find it very interesting that it's not. She never really mentions that what they're doing. Very proud. They're creating wealth. This is a great service. Talk about themselves as a tech company. This is. This sounds like it can be said from any tech company, and that's not the case. The people who are doing this, you could imagine, that it might not be the choice that they would make, but for the state of the economy. And where we're seeing problems with jobs, hiring, AI automation, and the turmoil that we have in the, we're headed into recession. You can imagine that this number might just keep increasing. Plus, it's not wealth creation. It's not wealth creation. Wealth creation happens when there is something, a productivity that is creating something new that wasn't there before. It's again a symptom of the financialization of the United States system. Remember, they were saying that this is a British company and that it's mostly Americans that are consuming the content, because what America exports is dollars. That is their main export as the world reserve currency. Come hell or high water, that's what needs to come out. And all the different systems within the United States are designed in order to create more financialization, more circulation of dollars. So whether this is a good thing or a bad thing, that's up to you. I'm not making any claims on that. I don't care if people do it or not, or rather, they have their own reasons to do it. It's not like I'm not here to judge. I'm here just to demonstrate, to point out that these things are happening. We are noticing them happening within the economy, and that is that's pretty interesting. Something to keep an eye on. You can imagine if you come back next year and you hear that this number is 50 billion, well, that might be certainly a recession indicator, or maybe even an indication of the collapse of the financial system. Wouldn't that be interesting? That the history books points out the rise of things like OnlyFans as canary in the coal mine. That's it for Daily Bread for today. We'll be back tomorrow morning with even more market news. Guys, keep on trading, keep on investing. We want to use this information to make money for ourselves and our families so that we can survive whatever comes next. Thank you for watching.